Hello everyone and welcome to Day Trader S&P 500. It's Monday morning, about almost midday, almost noon here Eastern time on April 21. Let's get you guys caught up with our newsletter subscribers here. I want to show you guys this auto trade, triggers and targets. I'll explain to you how that works. Let me just open up and I'll get this verbatim here if we can. There was the old April 17th. I'll show you guys this. Okay, so our auto trades are actual trades, actual profits and losses, stop losses, gains. Okay, developers, me, Dale Woodson. We use our triggers and targets and Fibonacci extensions and Elliott waves, of course. We use the Ryan Jones fixed ratio money management system. That's our money management system. Our trading system is the Elliott waves, Fibonacci's, and I use our triggers and targets. This is how it works. You open a futures trading account with Striker. They are a futures broker. I am not. Okay. There's how you open it. You contact William Gallowitz. We have a phone number. We have email address and website there. Okay. So that's how that works. And without further ado, we'll just get into it. Here's the auto trade system. It's called triggers and targets. We have ES, we have E-minis. Okay, we are number one for the account 20,000 and up with 9,000 some odd gain for the past 3 months. We are number 4 for the past 6 months, and we haven't been doing this long enough to be ranked for the previous year. Let me see if we can get that here. Yeah, there we go. There's the year. We haven't been doing this a year yet, so can't wait to get there so we can get in there. But there we are, number 1 and number 4. Hope to improve on that. Can't improve on number 1, but we can improve on number 4. So that's how the auto trades works. Okay, you open an account with a futures broker, Striker. They trade the trades I give them. They trade my trades. So that's what you would have made if you did this for the last 3 months, and that's what you would have made for the past 6 months. Okay, without further ado, let's get into, let's just do the US 10-year first. It's kind of exciting because we had this 1 up here and 2 down. Okay, and then we had an upside trigger right here. It came within 1/1000th of a percentage point of a direct hit on our target, our 786 retrace. Then we had a 1 up here, as you can see. I'll put it over here. And then a 2 down at a 382. It went higher, and then this is the interesting part. This wave 2 here is a low of 4.260, and it came down to 4.263. So within 3/1000ths of a point, okay? So double low there, and then a bounce up. So we expect this wave 2 to hold, and then this goes up in wave 3, and I think I have those wave 3 targets there. There's the third wave at this degree, which is 4.916, and then if you look at this 1 here in parentheses, and this 2 down in parentheses, that 3 target equals 1 at 5.044. Keep in mind, third waves generally go 1.618, but these are our initial targets. It could go much higher, which I think, as most people would say, spells doom for the stock market, which the doom is happening. Okay, let's see. Let's get to the weekly S&P cash. In the purple, we have a 4 here, and then a 1 in parentheses, a 2 in parentheses, and wave 3 up there. From there, we've come down. All right, to correct this 5-wave advance for wave 3 in parentheses. Let me make that full screen. It's a little bit crowded up there. There we go. You can see that purple, okay? And we had a 1, 2, 3, 4, 5 for the 5th wave. And if we're correcting this 5-wave advance from this October 2022 low, there's our targets there, and our 382 was 49.52. And actually that went lower. It's 48, is that 18 right there? 48.35. Let me see what that low is. 48.35. Yeah, that's current. Okay, you can see we have the 500 below that, and a 618 below that. That's the big picture, the weekly log chart of the S&P cash. I want to get into the ES because that's exciting stuff, okay? Here we're looking at a daily chart of the E-mini futures. There was a February 19th all-time high. Look at the black count. There's one down. There's two up. Move that over. And then the third wave is extending or subdividing. In the purple, there's one of three. There's two of three, okay? In this black in parentheses, there's 1, 2. There's our wave 3 targets there. You can see that one is just below at 47.73, and the other one goes all the way down to 41.17. So we have a 1, 2, and then a 1, 2. We'll see how this 3 down develops in purple. There's those targets there. Okay, so they are lower, obviously. And again, the 1 is the minimum, more likely is the 1.618. Let's get into the, that was daily. Let's get into hourly here. This should be the 1 hour. Okay, let's make that full screen there. Okay, so from that bounce up, let me do this. Here we go. We have, by the way, we're getting 786 retracements, which are ideal entry points because we always ask ourselves where you're wrong. Well, if it retraces more than 100%, it's wrong. So it goes to 786, so your room for error or your stop loss is tight. Excuse me, tight. So your loss is less if you're wrong. Okay, so here's our A, B, C for wave 2 in purple. Then we have 1 of 3, then we have 2 of 3. And here are our wave 3 targets here. We're nearing them now, 51.15. This is live at just short of noon Eastern time. And we're down to 51.57. There's 51.46 for the wave 1 low. We got to take that out. Again, that's the minimum target, 51.15.75. And the more likely is 48.79 and 3/4 if it goes to a 1.618. Let's drill down to the 10-minute here. Okay, there's the 10-minute, and you can see there we're looking at a target of 51.25 near term. I like to look at the last 5 waves down. Where's the next move down for you day traders or scalpers? That's what we're looking at there, okay? And we have, I want to see where that one was with this, yeah, 51.46. This would be a nice double bottom there. Where is it right now? The low is 51.55 and it's right near it. So it's breaking down as we speak. I want to take a look at gold if we can real quick because it's surpassing even our higher expectations, higher than most people. Okay, we'll make this, get rid of this and make that more full screen. I'll just show you guys this last bit here. There was a 1618 at 32.88. There is the current high. It's today. It still could go higher. So do we have the 2.618 on there? Let me see if I do or not. Settings. Yeah, the 2.618 is there. Where is it? There it is. 37, excuse me, 53. So that's what we're looking at for gold there. Okay, let's leave you guys with our bear with me a second here. Get at 417. Okay, again, there's the auto trades doing really good. People are making money. That's the main thing, right? We want to keep improving on that if we can. And that was our last chart. But again, that's not current because I haven't updated it. So let's go to the ES. There we go. We're going to look at the daily chart there, okay? And we'll make that, that's good right there. Okay, oh, our alternate count, A, B, C. A down, B up, C down. Okay, this low would have to hold here, 48.32. The market would have to get above this wave 2 high here at 55.28 and subsequent high of 58.37 for the bulls to be happy. Okay, this has to hold for the purple count in the bearish move. That has to hold. Again, where are we wrong? There and there. So we're looking at those 2 different wave 2 highs as holding for bear counts at different degrees of trend and then being broken to the upside for the bulls to get happy. Okay, until then, the market remains down. Stay in sell rally mode. And until next time, take care, everyone.